Hello, people of Zion. To buy or buy more, or not to buy? That was the question that plagued Sir Isaac Newton in the early 18th century when him and everybody around him was presented with an investment opportunity that seemed too good to pass up. When the public was offered shares of a company that was believed to hold monopolistic trade rights in exchange for England's £31 million debt, demand for those shares just rose. Within a matter of months, it doubled, tripled, all that good stuff, and everybody who bought in made money. Now, Newton, in addition to being a mathematician, was also a really financially sophisticated guy familiar with commodities and finances and all that, as shown by his position of Master of the Royal Mint. He looked at this opportunity, took some of his cold hard cash and bought in. Made a nice profit, and perhaps thinking what goes up must come down, sold. But did he dump too early? The shares kept getting pumped and newcomers kept joining in, and those who made money before started putting more of their money back in and making more money. And Newton just sat there having to watch everybody around him get Lambo rich. Famous aristocrats and artists and servants who had cashed in their life savings. Everybody was just making stupid money. Even the King of England, King George I, throwing some laser beam eyes and tweeted to the moon and put down a ton of his own dough. With everybody invested, so many, even the king, all right? The king was in. The whole thing seemed too big to fail. However, the shares were overvalued, and any historians here might think that's an understatement, and therefore the only way that they would have continued growth is if people didn't panic and start selling. So pump campaigns were abound. Our boy Newton caved, all right? He caved. He bought back in, but this time with a lot more of his own dough. He's like, all right, if we doing this, okay? And then of course, like a month later, people did start to panic and they started selling. And Newton bought the dip like a good boy, but people kept panicking and selling. And that happened until he lost everything and he got wrecked. All right, everybody did in what later became known as that fatal year. Some people probably just went home, beat their wife, but remembered they had their health and just moved on with their life. But there were some people who took their own lives. And it took England about over a century to recover from this. Now, I mentioned this tragic tale of Newton as an example of how one could get wrecked in a bull market or craze, depending on how you feel about it, if the people investing in it aren't really aware of what they're investing in, they're not educated about it, and therefore can't come up with a sound investment strategy that they can not only stick to, but not be likely to panic sell, just because others are selling around them. I'm not in any way, shape, or form trying to suggest that I think this current rise of Bitcoin or any other crypto is a bubble or a Ponzi scheme or anything like that. Of course, the truth of things in life is only ever revealed in time, but I personally support crypto. However, I believe that for it to succeed, you, the people investing in it, have to. And everything is won in the mind first, okay? So for this first part of this two-part video that is step 4 of my Investing in Cryptocurrency for Beginners series, I'm going to go into what I believe is the most important part of coming up with a sound investment strategy, and that is getting your mind right, okay? Let's do it. Welcome back, the Oracle from the blockchain here, and happy to help guide you through the golden crypto country. So to get this out of the way first, the only strategy technically that I can offer you on how not to lose money in the market is to not invest in it to begin with. Okay, that's the only. Some say, oh, you don't lose if you hodl or hold. And I get why they're saying that, because in markets you only make money or lose money when you sell. However, I don't have the same fortune telling crystal ball that they do that says that a market will rise or continue to rise or whatever. So I can't make those claims, which brings me to my first, point about the mindset I think you need to adopt. This might be the most important, if not the only mindset I believe you need to adopt to create a winning strategy here, and that is to make a commitment to think for yourself. Only humans follow unstable pack leaders, okay? And there are a lot of people out there willing to help you with your investments until there is nothing left, especially if they have something to gain from it. You know, the only way you're going to be able to come up with a strategy that you feel confident enough in to stick with, one that is designed to give you the peace of mind that investment vehicles are created to give you to begin with, is for you to get a full, informed, well-rounded view of what you're investing in. And that can take, you know, weeks, months, or year, however long, depending on your experience and how much time you have to do your own research when it comes to the industry and observing its various players and, you know, the markets and stuff. But, you know, take your time to understand everything. In your research, you're going to want to understand several things. All right. The first thing you're going to want to understand is the technology. And no, that doesn't mean that you need to go become an engineer and learn all the inner workings of blockchains and things like that. But if you're interested in a certain crypto for things like, you know, inflation resistance or store of value or as a cash system or decentralization or whatever, the tech behind each coin creates different outcomes as to, you know, its ability to be able to achieve those goals. So the more facts you get about that coin and its tech, you'll be able to know if the coin could actually do what you want it to do and have faith in it, and then therefore not panic sell if the price dips. There's a lot of misinformation out there. Even if you look at the most popular crypto in Bitcoin, there's a lot of misinformation. You know, there's people who say that the current cap of it being 21 million that could be mined is set in stone and, you know, unchangeable. And that's not true. It can be changed by the economic majority, the same way they had to vote a few years back if they wanted to increase the block size. They think that Bitcoin is fungible, meaning that they think that one Bitcoin is equal exactly like another, which, you know, is not always the case. A Bitcoin that's been tied to illicit financial activity has that transaction history there. At a lot of exchanges, they're not allowed to accept it. Maybe you got it in a peer-to-peer transaction and then you find out that one Bitcoin is not like the other. Unless you go around correcting people when they make mistakes or whatever, like I just did, and therefore becoming socially undesirable, getting the facts and doing your own research has nothing but upsides. Either you'll like the coin that you like, you know, for other factual reasons and make you have more faith in that coin as a result, or you'll find a coin that, you know, works more closely the way you would like a coin to work to achieve the goals that you want. So, you know, win-win, win-win. Do your research. The next thing you're going to want to get an understanding of is who's in charge of this ship. All right, when you buy into a coin or a crypto or anything like that, you are buying into a business. And a business is run by people, which in this case are usually developers. And in addition to knowing the project better and things like that, through reading its white paper or going to its website or looking at related materials, you're also going to want to look at the people. Unless the coin or crypto has a longer, you know, track record, a big historical track record. Well, it's long, not big, but longer than most, like a Bitcoin or Monero or something like that. You have to remember that most of these crypto companies are startups, which means that you have to do a lot more delving into who these suckers are behind it, running it. Okay, there's a lot of scammers out there, a lot. You know, they will come up with a great idea, a great one, and not really, you know, do much with it. You know, there's a difference between a great idea and a great execution. You know, you wouldn't even loan your Uncle Pookie some money for his food truck startup, and you had his chicken and you liked it, okay? So stop getting so careless now with your hard-earned cash. Figure out who these jokers are. And do your research. In researching the people in charge, and outside of maybe Dogecoin and a few others, there are always people maintaining the network, okay? Even if they try to make it hard for you to figure out who it is, there are always people there. So do your research there, look at their online resumes and their work history, and also their approach to business and tech and stuff via interviews and things like that. So like if we look at Ethereum, Polkadot, and Cardano, and we hear about what happened between Ethereum's Vitalik and Polkadot's Gavin and Cardano's Charles when they were isolated alone in the Switzerland house with the other 5 Ethereum founders. We learned that not only is their approach to how a smart contract blockchain should be designed different, but also their approach to business and ethics. Same with Solana's Anatoly, who's 12 and a half years at Qualcomm, has shaped his approach to not only just tech, but how businesses are run and things like that. And that'll determine, you know, how the company evolves and grows and things like that. And you want to be clued into that stuff. And when you research these people, you'll be able to create a stronger investment strategy, portfolio, and everything as a result, because you'll really only feel comfortable giving about one or two of these guys your money, or gals your money. So, you know, do your research there too. The next thing you're going to want to look at when coming up with your winning strategy is how a coin and its network is actually used or functions in the marketplace. Okay, there's a big difference between in theory and in reality. For instance, maybe you value decentralization. A blockchain could claim to be decentralized, but in reality, it's controlled by very few players or relies on a custodian in order for it to operate. Or maybe you like something that's a cash system, whatever. You want to use it as cash, but it's, you know, slow and expensive, the transactions. And so if you wanted to even use it as cash, you would have to consider a lifestyle of minimalism thanks to the fees. Or, you know, record the transaction in your will before it went through, because you might pass away before it's finished processing. You just might. Remember, this is all new tech. Things are changing every day. So you can also take into consideration a blockchain's plans to improve on speed and fees and things like that, because, you know, this is all new. This isn't, you know, it's very rapidly changing. And finally, when it comes to getting your mind right for a sound winning investment strategy, it's important to remember that you're essentially pooling your money with a bunch of knuckleheads, okay? So you're gonna wanna understand what influences market movement, whether it's policy changes, whale investments, you know, big news about certain companies, individual and crowd psychology, tweets, whatever. To get a better understanding of the marketplace, you know, I know we love our YouTubers and our podcasters and our Uncle Ray Rays who made a bunch of money by investing in Bitcoin back in the day. And now not only has his wife forgiven him for throwing all that money away in penny and marijuana stocks that didn't work out, but the whole family sees him as their very own Gordon Gekko. It's important to consult actual experts, you know, whether it's through your own research or individual consultations. So engineers in the tech field, economists who have information on how currencies and assets operate in the world on a national, global scale, politicians who can give you insight into upcoming policy changes, fund managers, tax attorneys, actual financial advisors. Of course, it helps if they have experience with tech companies, and of course the biggest expert of them all, history, because while the tech may be new, human nature, crowd psychology, and sound investing principles aren't. Social media sites like YouTube, Odyssey, Twitter, Reddit, all that, they can be great learning tools, of course, and you know, ways to stay up on crypto related news. But if you're not careful, they could also become traps for groupthink, which will compromise your ability to come up with a sound investment portfolio and strategy. All right, we can all get excited and just want to hear pro or anti crypto or our favorite coin or coin we don't like or whatever, so that we feel good about our decision. But the only way to come up with a sound strategy and portfolio is to expose yourself to both bullish and bearish viewpoints and to understand them, you know, because they will influence the market. And then you just go within and make up your own damn mind. Okay, you can do that. You can. There are so many competing schools of thought in the crypto space. And to take the most popular coin again in Bitcoin, there are some who think that its scarcity component and network effect and things like that make it a great hedge against inflation and the best store of value since sliced bread, aka gold. And they look to its decentralization for, you know, more personal freedom and to, you know, provide greater economic opportunities to those especially who were handicapped by their governments before and things like that, and also as a way that the government can't really shut it down. Things like, and then there are people who look at Bitcoin and see no inherent value in it and think of it as a speculative asset that is reliant on gambling, that a greater fool will come along and give you more for it than you paid for it, and somebody of course will be left holding the bag at the end of the day. They also think that governments will create their own cryptocurrency and regulate and or tax Bitcoin. to the point where nobody would want to go near it with a 10-foot pole, and that its ASIC mining and GPU dependent mining make its decentralization component questionable at best. Some think the mining is bad for the environment. Some think that the mining is actually better for the environment than the current banking system, and will also improve as mining companies race to find ways to consume less energy to improve their bottom line. Some think stocks and bonds and gold and real estate are still better current investments. Some point to Bitcoin being the best performing asset of the last decade, as something that makes it the best current investment. Some say China's level of involvement won't let it fail. Others say China. And then there are those who just think that the whole cryptocurrency space is just one way to just make some money right now, cash grabs, or show the man the power of the people, a la GameStop, and with Tourette-like fashion shout Dogecoin from time to time. Everybody, including your cat, has an opinion on whether or not, Bitcoin and cryptocurrency and all that is a good investment right now, but none of it will have a bigger effect on the strength of your strategy than your own personal, potentially subconscious psychological drivers. So take time to think about, figure out, why am I interested in investing in this extremely volatile market? Why? That information, that self-awareness will not only help you to formulate a good strategy, but also to help you plan for moments when you want to stray from it. Because in a volatile market especially, you are going to want to stray from it. It is all one in your mind first. Are you interested due to FOMO, fear of missing out? Is it greed? Is it hope for a better life? Is it a gambling rush that you get? Is it change in the world? Is it a sense of security? Is it just overexposure? Just all the hype everywhere. It's just, getting to you. We are all human, and therefore, influenced by these things, as the brilliant Sir Isaac Newton helped remind us. And so knowing why you want to buy or buy more will also help you decide, is this the right investment vehicle for me? And for those of you who do want to invest in the space, I got you. Next week, I'm going to go over the top investment strategies that people use to make money in crypto. Again, investing is for peace of mind, all right? It is not meant to add stress to your life. If you are investing in something and it is stressing you out, you are doing it wrong, okay? Invest in what you know and understand. And if the crypto space is really what you want to invest in, make sure you take the time to learn the ins and outs of it, okay? There is no rush, no rush. Everything that you need in life, you already have, okay? And until next time, remember that this is the Oracle from the blockchain, reminding you to eat a cookie.